Welcome to the Deep Dive. We cut through the noise, get straight to the insights. Today, we're plunging into a term you've probably heard buzzing around if you're keeping tabs on crypto.
Altseason.
Ah, yes, Altseason.
Oh,
It's almost legendary, isn't it?
it really is. This period where, altcoins, cryptocurrencies other than Bitcoin just suddenly take off, often huge gains.
Exactly. But the big question always is what actually kicks it off? There's so much speculation.
Constant buzz, yeah. Everyone's trying to predict the next big wave. When's it coming? What's the trigger? And, well, that's exactly what we're tackling today. We found this really interesting perspective in a Cointelegraph article shared via ADVFN.
Okay.
Yeah, quotes analysts from Bitfinex. And they're floating this idea that, well, it might change how we think about alt-season starting, or at least add a big new piece to the puzzle.
Intriguing. So not the usual triggers.
Potentially not just the usual triggers. So our mission today, let's really unpack this specific viewpoint. It feels like a fresh angle.
Definitely worth digging into. Okay, let's unpack this. So maybe just to set the stage properly first. When we say alt season, what exactly are we talking about? Why do investors get so excited about it?
Sure. So alt-season, fundamentally, it describes a specific phase in the crypto market cycle. It's when altcoins, and again, that's basically everything but Bitcoin, start significantly outperforming Bitcoin.
Right, their prices climb much faster.
Much faster, yeah. You see widespread gains across a whole range of different altcoins, not just one or two. Their collective market share relative to Bitcoin tends to grow quite dramatically.
And the excitement.
Oh, the excitement is huge because, well, it often means pretty substantial returns for people holding those altcoins. Portfolios can grow very quickly. It's a period of high energy, lots of buzz about new projects. And yeah, sometimes you see these almost unbelievable short-term surges. It's really characterized by rapid growth across the board beyond just Bitcoin.
Got it. That much hype time when it feels like everything's going up. Okay, so traditionally, when people try to guess when this might happen, what are they usually looking at? What are the classic signs?
Well, historically, analysis has leaned heavily on, I'd say, two main things. First, you've got historical patterns. People look back, the crypto market has shown cyclical behavior before.
Like looking at past bull runs.
Exactly. Examining previous alt seasons, trying to find recurring conditions, maybe timings linked to things like the Bitcoin halving events. The idea is sort of history might give us clues, even if it doesn't repeat perfectly.
Okay, historical cycles. What's the second thing?
The second big one is Bitcoin dominance. This is a really key metric.
Right, the percentage of the total crypto market value that's held in Bitcoin.
Precisely. And the conventional wisdom often suggests that for altcoins to really have their moment, Bitcoin's dominance usually needs to decrease.
Meaning money is moving out of Bitcoin.
Yeah, the thinking is that capital rotates from Bitcoin into altcoins. That outflow from Bitcoin provides the fuel, the liquidity, and momentum for altcoins to start their own big rallies.
So looking back at cycles and watching Bitcoin's market share, those have been the main tools.
Pretty much the go-to indicators for forecasting alt-season, traditionally speaking.
Understood. So history and Bitcoin's gravity. But this is where it gets really interesting, right? Because the source we're focusing on today throws a different kind of factor into the mix. The Cointelegraph article, citing Bitfinex analysts, it just states it plainly. Bitfinex analysts say that the start of an altcoin season may hinge on the launch of crypto ETFs.
Wow, okay.
Yeah, that feels like a significant departure from just looking at charts and dominance metrics, doesn't it?
It absolutely does. That's introducing a major external factor, something from the traditional finance world right into the heart of crypto market dynamics. It's not just about internal crypto flows anymore. It suggests that maybe how altcoins move in the future could be much more tied to these bridges to traditional finance. It's definitely a shift.
So let's dig into that connection. For listeners who might not be deep in finance jargon, maybe just quickly explain what are crypto ETFs?
Sure. So ETFs, exchange-traded funds, they're investment funds that trade on stock exchanges, just like regular stocks. A crypto ETF, then, is one that holds cryptocurrencies like Bitcoin or Ether, or maybe tracks their prices through derivatives.
So you're buying a share of the fund on a stock market, not the actual crypto itself directly.
Exactly. It gives you exposure to the price movements of the crypto without you having to worry about wallets, keys, or using crypto exchanges. It's a familiar package for traditional investors.
Okay, got it. So why, according to these Bitfinex analysts, would launching more of these ETFs be so critical for triggering alt season? What's in the mechanism they're pointing to?
Right, this is the core of their argument. It seems to hinge on a few key effects that these ETFs have. First, and this is probably the biggest one, increased institutional access.
Meaning big money players.
Precisely. Pension funds, hedge funds, asset managers. These institutions often face regulatory hurdles or operational complexities when trying to buy crypto directly. ETFs provide a regulated, familiar, easy-to-use pathway for them. It basically opens the door for potentially huge amounts of institutional capital that might have been hesitant to enter this space before.
Okay, so easier on-ramp for institutions.
Yeah.
What else?
Second, there's mainstream adoption and liquidity. It's not just institutions. ETFs make it much easier for regular retail investors, too. Someone might be wary of signing up for a crypto exchange, but perfectly happy to buy an ETF through their existing brokerage account.
Makes sense. Lower barrier to entry for more people.
Exactly. And when you get both more institutions and more retail investors coming in via ETFs, that significantly boosts the overall liquidity in the market. More buyers, more sellers, more trading volume. It generally builds confidence.
Right. More money sloshing around.
Yeah. And then third, and this ties directly back to Altseason, is what you could call the flow-through effect.
Okay, how does that work?
Well, the initial wave of money coming through these ETFs, especially the first big ones, is likely going to flow primarily into the largest, most established crypto asset, which is usually Bitcoin.
So Bitcoin gets the first boost.
Right. It strengthens Bitcoin's price and market cap. But then, as the market absorbs this inflow and as overall confidence grows, some of that capital might start looking for higher returns elsewhere. Investors might decide to diversify or rotate some profits from Bitcoin into altcoins that look promising but maybe haven't run up as much yet.
Ah, the trickle-down idea.
Sort of, yeah, or a rotation. That movement of capital out of Bitcoin into a broader range of altcoins is exactly the kind of dynamic that could ignite that widespread rally we call Altseason.
So the ETFs act like a gateway, bringing in new money mostly to Bitcoin first, which then potentially spills over into alts.
That seems to be the mechanism proposed. And, if we connect this to the bigger picture, it really points towards crypto becoming more integrated with mainstream finance. Regulated products are starting to have a real impact on market movements.
That's a really clear explanation. It shifts the focus from just internal crypto stuff to how crypto interacts with the wider financial world. So, given this Bitfinex analysis, how should we think about predicting market moves now? Does this ETF perspective replace the old ways looking at history and dominance, or does it just add another layer?
That's a really important question. I think based on this, it's definitely more of an additional layer rather than a complete replacement.
Okay.
Those traditional indicators like historical cycles and Bitcoin dominance, they still reflect fundamental aspects of how capital behaves within the crypto ecosystem. The internal supply demand, the sentiment shifts. You can't really ignore those. They'll likely always have some relevance.
But they're not the whole story anymore.
Exactly. What this Bitfinex viewpoint highlights is that as the crypto market matures, as it gets bigger and more connected to traditional finance, these external drivers like ETF launches, regulatory decisions, macroeconomic factors, they're becoming increasingly powerful.
So it's becoming more complex.
It is. It encourages a more, let's say, nuanced understanding. It suggests that if you're trying to analyze the market, you need to broaden your view. You can't just look at on-chain data or past charts anymore. You also have to pay close attention to what's happening in traditional finance and how these regulated products are bridging the two worlds.
The analytical toolkit needs to expand, basically.
Perfectly put. The market's evolving, and our analysis has to evolve with it.
That makes a lot of sense. It really emphasizes how dynamic this whole space is constantly changing. So bringing it back to the listener, what does this all mean for you if you're trying to stay informed, trying to understand where the crypto market might be heading?
Well, I think the core takeaway is right there in the Bitfinex analysis.
Yeah, let's summarize that. The main idea we've unpacked today is that the trigger for the next Altseason might not just be those traditional signals like history or Bitcoin dominance falling.
Right. Instead, a really significant factor could be the continued launch and adoption of crypto ETFs.
Driven by that easier institutional access, broader mainstream participation.
And that potential follow-on effect, where capital flows first into majors like Bitcoin via ETFs, and then potentially rotates into altcoins.
It definitely gives us a fresh lens, doesn't it? It signals this ongoing shift. Maybe less reliance purely on internal crypto metrics and more influence from how crypto is integrating with the broader financial system.
It really does. And, this shift in perspective is quite profound when you think about it. It prompts us to consider how the actual nature of alt-season might be changing as crypto gets more entwined with traditional finance through these kinds of regulated vehicles.
How so?
Well, it raises a really important question for all of us to ponder, I think. As this integration deepens, will alt-season itself transform? Will it move away from being these sometimes purely speculative, almost wild surges driven by crypto-native narratives and retail hype,
Towards something else.
towards perhaps more institutionally driven cycles? Maybe cycles that are influenced more by broader market risk appetite, by allocation decisions from large funds. Could they become, dare I say, a little more predictable, or at least follow different patterns than before?
That's a fascinating thought. Could the very character of Altseason change as the players involved change?
It seems like a possibility worth considering.
Definitely a powerful thought to leave everyone with. As those lines between TradFi and crypto keep blurring, understanding these evolving drivers like the role of ETFs becomes absolutely critical. Well, thank you for joining us on the Deep Dive.